Stop scrolling. Stop overthinking. Because right now, in April 2026, the market is handing you a rare window of opportunity that most investors are completely sleeping on. 3 stocks, 3 different sectors, 3 compelling stories backed by real data and real momentum. Whether you're a seasoned trader or just getting started, today's picks of something special: undervalued price points, powerful catalysts, and serious upside potential as we move deeper into the second quarter. I'm going to break down each stock, what it is, what the numbers say, and why April could be the launching pad. So hit that like button, let's get into it, and as always, this is not financial advice. Do your own research. Let's go. Stock number 1 is a name you know, but maybe not, for the right reasons. We're talking about BlackBerry Limited, ticker symbol BB, trading right now on the NYSE. Now, when most people hear BlackBerry, they think old phones, keyboards, nostalgia. But here's the thing, the former smartphone icon is now a pure-play software company, leaning heavily on cybersecurity and automotive, IoT software. This is a completely different business. Let's look at the numbers. As of today, BB is trading with a previous close of $3.48, a day range of $3.53 to $3.65, and a 52-week range of $2.81 to $5.32. That tells you something critical. This stock has already proven it can move. And right now, it's trading closer to its floor than its ceiling. The 1-year analyst target is $4.88. That's meaningful upside from current levels. And Wall Street isn't being completely dismissive here. Based on analysis from Wall Street analysts, BB has a neutral consensus with a median price target of $4.75, ranging from $4 to $6. Now let's talk about why there's upside. BlackBerry's financial performance highlights a net cash increase to $181 million, signifying robust liquidity. Meanwhile, the company's secure communications segment demonstrated a gross margin of 70.2%, reflecting an improved revenue mix. That's not a struggling company. That's a company in transition, tightening its ship. And here's the catalyst that has me most excited: the QNX division. BlackBerry's QNX division announced a major design win with one of China's top automakers. The automaker will deploy QNX sound across its next-generation luxury EV lineup, starting in 2026. Electric vehicles, software-defined audio. This is exactly the type of real-world win that pushes a stock higher. BlackBerry also recently renewed and expanded its partnership with the Government of Canada, a sign that government-grade secure communications remain a cornerstone of their business. The market cap sits at approximately $2.08 billion. For a company with this level of IPIP, government contracts, and automotive software wins, that's a compelling valuation. BB is a slow burn play, but the fuse is lit. Alright, stock number 2 is for the high-risk, high-reward crowd. This one is not for the faint of heart, but if you understand how warrants work and believe in cybersecurity, this is one to watch. We're talking about HUBCW Limited. Warrant, ticker HUBCW. Trading on NASDAQ. Today it's priced at just $0.0075 previous close, with a 52-week range of $0.003 to $0.035. That's a penny-level warrant, ultra-low cost, with explosive potential if the underlying company gains traction. So what does HUB Cybersecurity actually do? HUB Cybersecurity provides cybersecurity solutions in Israel, the Americas, and Europe. It operates in 2 segments: product and technology, and professional services, developing and marketing integrated cybersecurity hardware, software solutions, including data and cybersecurity, system security, and reliability solutions. But lately, HUB is doing something much bigger. They're pivoting into what they're calling a trust infrastructure strategy. HUB launched SecureRide, a perpetual trust infrastructure for rideshare platforms. Commercially debuting with Fair Co-op Platform 2.0, SecureRide provides continuous driver and rider verification using HUB's Secure Data Fabric, targeting the $260 billion global TNC market, projected to exceed $400 billion by 2030. They're also expanding into critical minerals infrastructure. HUB signed a term sheet to acquire 100% of Ferox, critical minerals, and its Tivoni project in South Africa, a fully permitted magnetite and ilmenite asset position for production and sales in FY 2026. Defense-grade security embedded in real-world strategic assets, that's a fascinating pivot. Now, there are risks here. I want to be transparent. HUB CEO Noah Hershkovitz resigned effective March 31, 2026. And the company is seeking an interim and permanent CEO replacement. Leadership transitions create uncertainty. Add that to the fact that the warrant's bid-ask spread is wide. Bid at $0.0075. Ask at $0.0099, and you're dealing with thin liquidity. But that's the nature of warrants. HUBCW is a speculative play. Small position sizing, big upside if HUB executes its vision across cybersecurity, rideshare trust, and critical minerals. At less than a penny, the risk-to-reward ratio is worth a serious look for adventurous investors. Now, meet our third stock, a hidden gem in the making, Data Storage Corporation, ticker DTST. DTST trades on NASDAQ, in the tech sector under HP Services. Current price range, $3.82 to $3.93 today. Previous $3, 84 50-week range, $2.93 to $5.44. Market cap, approximately $29.36 million. Yes, this is a microcap. And microcaps can move fast when the story is right. So let's talk about why DTST's story is compelling right now. Data Storage Corporation focuses on investing in and supporting businesses in GPU infrastructure as a service (IaaS), AI-driven software applications, cybersecurity, and voice, data telecommunications. If you're catching those keywords, GPU, AI, cybersecurity, those are three of the hottest themes on Wall Street right now. DTST is positioned right at the center of all three. The company recently completed a major strategic transformation. The tender offer was funded with cash from the sale of its cloud services business completed in September 2025. DTST is now fully refocusing on high-growth areas including GPU IaaS, AI applications, and cybersecurity. Their 2026 plan centers on a disciplined, hybrid acquisition strategy focused on technology consolidation. They have cash, they have a plan, and they're actively hunting for deals that will drive growth. And here's a number that made me do a double take. DTST's earnings last quarter came in at $2.20 per share. Rest of $0.14 resultings, that's not noise. That's a company quietly and consistently outperforming expectations. DTST generates $25.53 million in trailing 12-month revenue with a 64.1% profit margin and revenue growth of plus 28.2% quarter-over-quarter. Those are strong underlying metrics for a company this size. With its pivot into AI and GPU infrastructure, strategic advisory appointments, and ACO-aligned equity bonus structure tying leadership directly to shareholder value, DTST is building for something bigger. The 52-week high of $5.44 shows it's been there before. The question is, can it get back? So there you have it. Three distinct opportunities this April. BB, the BlackBerry software comeback. Backed by cybersecurity growth, QNX automotive wins, and government contracts. HUBCW, the ultra-speculative warrant on a cybersecurity company pivoting into trust infrastructure and global markets. DTST, the microcap AI and GPU infrastructure gem quietly outperforming and executing a bold 2026 growth strategy. Every one of these stories has upside ahead, but every one of them carries risk. Size your positions wisely, diversify, and always do your own due diligence before putting your money to work. If you found value in today's breakdown, like this video, subscribe to the channel, and hit that notification bell so you never miss our next deep dive. Until next time, stay sharp, stay informed, and trade smart. See you in the next one.